All right, it is E with marketwizards.com, eminywizard.com, and it's about 3 o'clock on Tuesday, the 22nd of January, 2019, with an update. And we've got, well, let me remind you all of our disclosures. Check on our site. We talk about the potential for loss and risk and advise you to make sure that you are using risk capital you can afford to lose if you're playing this game. Well, we've had quite a dramatic turnaround from the lazy pace early today, and then it just accelerated. And I said at the time early this morning, I don't think we're quite ready. I said maybe a day away. We know we need the pullback, but I said usually when we start to chew this, it tells me we're ready, but not quite. But I said we're going to keep an eye on the red line. And you can see we've had this first push, this second push, and then this third push down. And so that makes me cautious about expecting too much more today on the short side. And this is one of the charts that I really like to use day in and day out. And we can flip this to a 10-minute variety, see a little bit more posture. And then obviously we can go to a 15, which is even bigger. And we can see, truthfully, it looks like the 15 is the best proxy for this market right now. And we've got to account for yesterday, which was a throwaway day. So we've undermined all those traders from Friday. And there's an RTH chart. We've undermined all those traders. And then this scene of the crime idea, China news. And this was 21. So we've come down and we've undermined those traders. But I think it's a good place to make sure you get paid. We've had a pretty good poke south side, and certainly more than I was originally expecting today. We read it correctly once it started towards lunchtime to said if we can't get back up here and take out that 52 resistance, it tells us we're still not ready to go up yet and potentially still seeking support. And this break right here, I thought was the key break. Once we took out that second low in here, this we undermined the overnight low, and then we're bouncing and chopping. But then right here, we couldn't get back up above 48. Said let's use 48 resistance, that area where the overnight low was, and then it's just been lights out ever since. Predictive model has suggested, and this was an adjusted model, we said, because yesterday's range was too tight to use it. So we corrected it and just, we have a system to correct it. Had that plugged in, and we said, okay, 22s, make sure you're paid, and then 17s, make sure you're paid, based on this model as well. If we are looking at a bigger frame, like the yearly chart, or even now, since it's still only the first month, this would represent a monthly chart. We said early this morning, 7 o'clock this morning, I said, okay, this is our big support. Never dreaming at the time when I said that we'd come down and we would test that area. But just by the law of proportion, if we bust this 47, then I'm looking down here and saying, okay, basis this range, that's got to be our next idea of support. Now, if we knew it was coming down here, obviously you'd sell and mortgage the house and the kids and the wife and say, okay, let's load up. But you don't know. Once we start down this path, nobody knows until we get to the end of it. Not me, not you, not anybody. But we did say, let's take a look at the idea that our 60 chart was a problem. And we'd said earlier today, this was going to be what we considered to be our big support under that, because this is where this drive came from. Top, 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 got above it, pulled back to it, and took off. So these 2 days, we've erased a lot of those gains already, but nothing conclusive. This is a pullback, and as you can see in the yearly range, really meaningless until we stall, bounces, and then come back down here and start to test into that 87, 88 range. And that's going to be big, obviously, scene of the crime idea and so on. So this is the range we're in currently. 48s we're leaving as resistance for now. We said earlier today that bounces could be hit one more time. And we've had a pretty solid knife all the way. Lower highs, lower lows all day. And RTH. So I'd said let's use that 37, 38 area as resistance for now. Still is. That trade has come together beautifully. And if you check your notes in the room, we talked about this potential target and make sure you're paid coming into it. Angels and demons. Drifted south side, never could get up into yesterday's range. Drifted, we said let's use 56 and a quarter as a marker. Pull back, very small bounce. Third time through at this 42 to 41 zone. Little dynamite triangle here. And we have continued to come backwards, and we started the day saying we're searching for support. Guess what? We still are. We can go to any low today. We're in no man's land now. So we're using this green circle to depict current support box, yellow to depict that next fighting range, and then obviously above that, that 48 to 50 area, we're going to use that for resistance for now. And this is day 2 of a pullback. We had said in a 2-year basis that we wanted to cap it at 2680. We thought that we could get above the 32s, and that would confuse traders when we went above it, but you really had to keep looking at this chart to understand the relationship, because this had been working so well from the 2-year driver back here. And so this has been a pretty good poke from that low to this high. And then we're going to go back and look at the 1 year. Which is this year's. Let me get the other one. Wrong chart. And this is the 1 year chart, last year's chart. And this 32 that we've talked about here is actually last year's middle. So we know that we're in the pipe last year. And that is, this is the pipe. Resistance at the top, support at the bottom, and the middle of it is obviously this 32. So we're going to keep our eye on this chart. This is going to be a very important chart going forward. Understanding resistance, understanding the last year's support, and range trading obviously inside that. So if we plot this year's range, And we know that the high on Friday to this 2438 area, this is the range. So this is a 1, 2, 3, 4 box move, not quite the 5 yet. So theoretically, this is the range now that we really need to pay attention to. And Friday's highs, resistance until broken. We've come a long way in one day. Actually, 2 days. We'll count in one day, but you can just see how fast these bars are moving now, size of them. So we're going to keep an eye on that chart. And in today's 5-minute RTH chart, we still have not broken that red line. So it is a solid downtrending day. And I'd said earlier that probably won't get much of a bounce now that we've clearly got a rabid dog day in progress. And the inability of the longs to get it back above the red line and test the blue line has sunk this line all the way down here in one day. That's a pretty good move. Just like it's an opposite mirror move to last week's 2 days. And this is why you protect yourself at all times. RTH chart. 17 has been tested. Suggested earlier that we were going to use that 38, this zone right up here, thought was critical, and it has held. And you could see the formation, and then we come through it. This is your lunch chop right here. You can see it. And if lunch doesn't give you the bounce, then you expect it in the afternoon. And so far, there's been no sign of a big boy wanting the upside, because the rotations have been small for the bounces. And that's probably because it's day 2 of a sell-off. Probably get at least one more. Right, Taylor, day 3 idea. So price-wise, I like this test at the 17. Inconclusive that it will stay there, but for sure you want to make sure you're paid coming into that. Just law of proportion. Support. Back here. Fighting box. Resistance box.